It's March 26, 2014, current time 10:51 GMT. Jay Meisler here with the daily Forex trading outlook. We can start today. We're talking about the Aussie, which has been a key focus and is pulling most of the commodity currencies, the New Zealand dollar and the Canadian dollar higher with it. It was the one that's been most under attack. If you look at the weekly trend line that dates back to mid-April of 2013, it was broken this week at 90.95. So you can see technically why it's moved higher. Using the weekly chart, key level is not until 97.43, but that's a weekly chart. If you look at the daily chart, we're now above all relevant moving averages, 20, 50, 100, and even the 200, which seems on this chart comes in around 91.40. The last time we were above it, I would have to go way back here because we touched it even here in October, but it probably goes back sometime into last year, so that's significant. You look at this chart here, the next key level is 94.50. It's not a projection, just pointing out on the charts. Taking a more, let's say a more micro view, 92 even is going to set the tone, and 92.50 is a potential obstacle. If we get to above 92.50, then we have more of a void on the upside. Right on the Aussie, why is it higher? You can give various reasons. Wire services are grasping everything from China stimulus to maybe the RBA not talking it down aggressively anymore, interest rates not moving. Whatever the case, it's been portfolio flows. As you can see, this is not been more than just spec. It's been portfolio flows. If you look at currencies like the yen and the euro, which has basically been stuck in tight ranges, the offsets have been felt mainly in the Aussie, with these currencies are probably on the other side of the crosses, staying relatively stable. So when they stay stable, the I call cross trading 101, the impact of these cross flows, and I assume they are cross flows, are being felt in mainly in the Aussie. So I hope that's clear. Other currencies stay static, and the Aussie takes the brunt of the crosses, and that's why it's moved higher. So watch 92 even and 92.50 as the immediate thing, but 92.50 is more psychological, one of my 50 levels, more than a technical level. Euro dollar, to me, is stuck in this range. We've narrowed it down to around 137.50 to 138.80. If you look at the 1 hour chart, which is, let me get everything down here. The 1 hour chart, which is kind of a mess. If you look the way it's been trading, you got that spike down, probably on Yellen. You had a spike up, you had a spike down, another spike up. All this is doing is running stops within a range. And if you look at the euro on the daily chart, as I said before, it has been trading 138 5 days in a row. When that happens, and you saw it happen at 139, the market's setting up, the ranges tend to compress, and when that pattern is broken, you usually get a directional move. While the pattern continues, you can trade a range. I assume it's going to come back to 138, but be on guard the longer it goes on. The question is, what side's going to break 137.50 or 138.75 right now? If you look at what's going on in the euro, there seems to be a step up of some verbal intervention. The other side of it is the market says it's, there needs more action than talk, and I think it's more talk than action right now. But you are seeing signs that if euro goes significantly higher, which some feel is above 140, it may force the ECB's hand. And if they do make a policy move, it's you'll assume it's a signal that the euro's gone too high and it wants to counter its strength. That seems to be the only thing at this point to force the ECB to act. If not, it's going to be more talk than action. But they have pointed out that if it goes much higher, they may step in, and that may be a restraint on the upside. Otherwise, this is a week, once again, heading into month end, and next week we have an ECB meeting and non-farm payrolls we'll discuss next week. Otherwise, for the euro, it's just a range around 138, and unless it establishes either side of 138.750, 138.50. Market will probably trade it as a range. That's it for today. And good luck and good trading.